So we've made it through the summer buying season. How did things look in Las Vegas in the year 2020? I'm Justin Miller with the Chong Miller Group, and this is the market update for residential resale single-family homes in the Las Vegas Valley for September 2020, where we look at the August 2020 data. So let's dig right into this. The median sales price in October increased yet again. It increased to $330,000 from $325,000 last month. That's an increase of 1.5%. We're also 8.9% higher than we were at this time last year. At the end of August 2019, we were at $302,950. So pricing is strong. We are up almost 10% year over year. If we actually look just across 2020, we're up again just about exactly 10% from January through the end of August. Pricing is strong. It's staying strong. It's not weakening. We are not seeing prices dropping in the Las Vegas Valley. So again, we're up 1.5% over July, and July had been a strong month. Now, I do want to take a moment just to point out, as I had said in the Ask the Professor video last month, where I talked a little bit about statistics describing the distribution of the data. If we simply took the data that was listed in the multiple listing service across the Las Vegas Valley, the price increased to $335,000. But again, the multiple listing service data has embedded within it not just resales for single family homes, but also it has builder units that have been released into the multiple listing service. Some builders released some of their inventory into the MLS. I segregate that out so that we're always looking consistently at the exact same thing. So the number is actually $330,000. That's the resale number, median sales price, single family resale homes in the Las Vegas Valley. I'll show you the same thing on the number of units sold. So what is that number of units? In August, the number of units sold, single family resale residential in the Las Vegas Valley, 2,720. Now that's down 11% from the very strong month of July. Remember, July was the strongest number we'd had going back 2 years for any month, going back 2 years, when we were at 3,077 resales. So we're down 11% from that. We are down actually 9.2% from where we were at the end of August 2019, when we had 2,995 units sold. So we're at 2,720 units sold during August. As I had predicted, things would slow down a little bit from July because the July numbers were so strong and inventory was becoming so incredibly tight that it starts to become hard to find houses for people to buy. Now, again, if we just simply take the MLS data without segregating out those houses which have never been sold, and have therefore sold for the first time, that number increases by actually almost 200. It would have been 2913. And so when you listen to some other people with their statistics, they don't take that data out and they get greater number of home sales and higher prices than are actually warranted, actually descriptive of the population of data that is described as resale residential single-family homes in the Las Vegas Valley. All right, so what about months supply? Inventory remains incredibly tight, and this number seems to fluctuate some. We again report at the end of August that there were 2.1 months worth of supply in the marketplace. That's it. It's a very tight market. Now, that's down from 2.4%, down actually 12.5% from what it was at the end of July. If you've been watching a number of these videos, you know for the past several months, we've actually been talking, it's 2.1 months worth of supply. It's because what happens is some data comes into the multiple listing service late. Things like listings come in late sometimes, and if they do, that increases the supply of available houses. Sometimes sales come in late, and that increases or decreases, could go either way, the number of houses sitting in inventory, because sometimes what we find actually are back on markets, collapsed sales being reported late. So the number, as we record this on the 8th of September, is 2.1 months worth of supply at the end of August 2020. Now, again, down 2.5% from what turns out to be the months of supply of houses on the market at the end of July, although initially we thought that was a little bit lower. It's down 45% from the 3.8 months worth of supply that we had at the end of August 2019. So in reality, inventory is really tight. Let's look at that in terms of actual numbers of houses as well, because that's an interesting number. It's confirmatory of months worth of supply. So at the end of August 2020, there were 5,207 single-family homes in the resale marketplace available for sale. That's down 11% from 5,847 at the end of July. It is down 45% from the 9,452 that were available at the end of August of 2019. Another way to look at this number, it's actually the lowest number of houses available for sale in the Las Vegas Valley going all the way back to June of 2008. And if you think about that, 12 years ago, right, all the new construction that's taken place around the valley, all of the new residents that live in the Las Vegas Valley, the valley was smaller at that time, right? The number of houses were smaller at that time. So to have had fewer number of sales, homes available for sale at that time would have been less unusual. In reality, right now, the number of homes, right, the percentage of homes available for sale is lower still. The number of homes is the lowest we've seen since June of 2008. Inventory remains incredibly tight, and that's causing this upward pressure on pricing. Interest rates continue to remain very low as well. We've got some clients who just refinanced on VA loans at 2.25 and 2.5%. If you're thinking you're going to be staying in your home for a while, you may very well want to be looking at refinancing because interest rates are so low. Do know that refinancing can take anywhere from 45 to 75 days. It's a little bit slower process, but you have the ability to save some money on your mortgage payments if you're in an interest rate that frankly is anything 3.5% or higher. You could be cutting your monthly mortgage payments with what these interest rates are. Or of course you could move into, for the same kind of payment, nicer house, or you could cut your mortgage payments considerably moving into, if you're downsizing, moving into a smaller house or moving into a condo or something like that. So there's another statistic that I've been providing the past couple of months, and that is pending home sales. That is number of houses that are sitting in contract at the end of the month, at the end of August 2020 in this instance, that have not yet closed. Now, they may close the very first week of September, so they may have closed in the interim. They may close late in September. They may close in October or November with long escrows. Some of them will fall out of contract, but the number of pending home sales is an interesting statistic. At the end of August, 3,402 homes in contract. Now that, of course, ties up a lot of the inventory that's sitting out there. So inventory is even tighter than it may have looked at first blush. Well, how does that compare? Remember, last month, we had a very high level of pending home sales, higher than actual sales. That was 3,099. Our pending home sales are actually up 9.7% from that. At this time last year, at the end of August 2019, we had 2,817 pending home sales, and we are up 20.7% from that, houses sitting in contract. Again, you've got to go back to April 2012 to find so many houses in contract, not yet closed, but in contract. This is a really big number, right? That's more than 8 years ago to get to this kind of number. And if you think about where we were in 2012 in the Las Vegas Valley, we were emerging from the financial crisis, and there were a lot of home sales that were taking place to large companies trying to buy up lots of property to put them into rentals, and individual investors who were looking at very low-priced opportunities to be able to move into this market. We're seeing this number of signed contracts, pending home sales, especially when you add them to actual closings. We're seeing numbers we haven't seen in the Valley in 8 years. This is a very high level of activity taking place. Now, of course, offsetting houses that are coming out of the market because they're selling, there are houses that are being listed. And so listing activity in August definitely was higher. We had 3,810 houses come onto the market. Now that's up 4% from the 3,664 that we had seen come onto the market in July. And of course, that was after very weak May and June. So we're seeing inventory come back, or we're seeing supply come back. So in August 2020, the average, or the median, sales price per foot was $177. That's up from $175 in July of 2020. So that's up 1.1%. It's up from $165 per foot, so $12 more per foot year over year. That's up 7.3%. So any way we look at pricing, pricing is going up. Any way we look at sales, numbers of sold homes, and contracts of pending sold homes, those numbers are very strong. They're not only stable and or higher, but they are consistent with what we would see at this particular time of year on an average year. And if we look at inventory, inventory remains incredibly tight, while interest rates also remain incredibly tight. What does that mean? That means there'll continue to be upward pricing pressure in this market. That means that there will be difficulty finding new homes to purchase, existing single-family homes in the resale market to purchase, but they obviously do exist out there. So what does that mean in terms of the future of the market? How we're going to look as we continue through September into the fall and then into the winter buying and selling season. So because inventory remains very tight and interest rates remain very low, I expect there's going to be continued upward pressure on pricing. For those of you who are worried about what is going to happen with foreclosures and things like that, evictions for tenants, I don't foresee a massive eviction wave. I think there will be undoubtedly some evictions. I think that the market actually will process these activities in a way that's a little bit less harsh. We're not going to end up with hundreds of thousands of people living on the street, and landlords, frankly, are not going to want to be evicting tenants who have had a problem paying because of what's going on in the environment, but who are maintaining contact with the landlords and attempting to do the right thing. On the other hand, if you're a tenant and you're able to make your rent payment and you're simply choosing not to, your landlord will evict you, because they're in no worse situation if they have either no tenant or some new tenant who comes in and doesn't pay them. But for people who are legitimately hurting and having a hard time making rental payments, for a landlord to evict you, and there are some jerk landlords undoubtedly, and some dislocation will happen, but generally speaking, landlords are going to operate under the belief that they are better off trying to work through legitimate dislocations that are happening with existing tenants, with the understanding that they're going to end up getting some amount of back rent from those circumstances than simply evicting, collecting nothing, and starting over with a small tenant pool who have experienced whatever dislocations of their own. There's not necessarily a vast pool of tenants out there who are looking to buy, who are looking to rent a lot of things, who have preserved credit. As to foreclosures, I think that the banks learned from 2007 to 2012 that massive numbers of foreclosures are disastrous, not just for a local economy, but for the banks themselves. We are operating in an environment that has mortgage forbearance widely available for people who need it. Unfortunately, a little bit for people who don't need it as well. And you can get into trouble taking forbearance that you don't need, because you could end up with a very large balloon payment that's going to put you into a situation where you basically can't stay in your house. But for those people who need the forbearance, they cannot make their mortgage payments, there's a couple of things that we can do to assist you. One, we can negotiate with banks about where you're going to have to make up those payments. Another is that if we get to, in the 12 months of forbearance, if we get to the 6-month point and we start to believe that, hey, somebody's not going to be able to recover and be able to make their payments on their mortgage once they get out to the 12-month point, and they start to therefore envision the possibility of foreclosure, well, we can put the house into the market and sell it at these higher price points, preserving the capital for the homeowner borrower, preserving the credit score for the homeowner and borrower, and allowing that homeowner to exit their property in a manner that is good for the functioning of the market, putting a little bit more inventory into the market as well for potential home buyers to buy. So I'm not seeing massive foreclosure waves. I don't think that's going to happen. I think there are a lot of people talking doom and gloom out there for various reasons that we don't need to get into. I think the market's going to remain a bit more orderly than that. I think, again, the banks learned that acting in their own best interest necessitates avoiding massive foreclosure waves. Will there be individuals who get foreclosed on? Undoubtedly so. There are some lenders who are not going to be cooperative. There are some people who will not realize that they're in over their head until it's too late and they're drowning. But generally speaking, I think that most of these difficult mortgages will end up being worked out in a way that preserves equity for the owner borrower, as well as keeping the houses out of foreclosure. So what that means is I see prices continuing to escalate. I see inventory continuing to remain very low. I do, however, as we saw from July to August, with a small decrease in sales, an 11% decrease in sales month over month, I think that the number of sales are probably going to decrease again in September. Not very much, probably mid-single digit level decrease, down 4 to 6% in September relative to August. In the October, November, December timeframe, remember, we always get a seasonal slowdown in the market, and I think that we'll see that seasonal slowdown in the market this year. Now, one thing I do want to point out that I've started noticing this past month in the marketplace, and it's a negative, it's a problem. You'll remember that back in the April timeframe, May timeframe, we were seeing lots of houses being listed as back on market. And what that meant was they'd been in contract for sale and the sale had collapsed. And so those houses didn't end up being sold, rather they ended up coming back into the market. And so it's referred to as back on market. We saw very healthy back on market numbers in June, July. In August, I've started seeing additional back on market houses, and they're related to a different situation now. It's not the coronavirus causing unemployment dislocations and lending dislocations causing contracts to fail. Rather, I'm starting to see appraisal problems in the marketplace. We've seen it on a few of our transactions on the buy side and on the sell side. We've seen it in transactions with other agents that we've been talking to. And so I do not have clear statistics on this phenomenon, but I'm seeing it anecdotally at a significant level of occurrence. It seems that appraisers are not happy to acknowledge these increasing prices, that the statistics are absolutely showing that we're seeing strength in numbers, we're seeing strength in prices. And so we're seeing appraisals coming in most times still at contract, but increasingly frequently below contract pricing. That's a problem. If you're a buyer and you get an appraisal that's low on the house you're buying, you may think, oh, great, I'll save some money. We'll just renegotiate around that new price. However, the seller may be hesitant to do so for a variety of reasons, including they may not have the capacity to do so. If you're a seller, low appraisals can be pretty disastrous, and these low appraisals are actually impacting transactions. They are actually causing transactions to fail, and that's why we're seeing in August higher back on market numbers than what we'd been seeing in June and July. I'm worried that that trend continues, and it's a negative, and in truth, there's no good reason for appraisers to be writing low appraisals. Do low appraisals help buyers? No, not really, because if you've got a buyer who's entered into a contract with a seller at a price that's mutually agreeable, the price is mutually agreeable. And so if you cause a buyer to be knocked out of contract, that's bad for the buyer. Is it good for sellers? No, absolutely not, for similar kinds of reasons. The only people who benefit are banks, and frankly, the benefit to a bank of seeing low appraisals is incredibly marginal. If a bank says, well, I would have lent you $400,000 on this transaction, but the appraisal came in low, and now I'm only going to lend you $398,000, at the best, that low appraisal eliminates risk to the bank, assuming the transaction closes, on $2,000 of lent money over a 30-year period of time. So that's an incredibly small benefit to the bank. The appraisers continue to get their money. It's not clear to me why appraisers are coming in low on their appraisals, but it is a phenomenon that I'm starting to see recurrently in the market. It's not just a one-off. It's happening with some degree of regularity. And again, I'm seeing it anecdotally from a lot of the other agents who I check in with, as well as on transactions that we've been involved in directly. So what do I recommend then? If you're a buyer, this market is hot. We are seeing properties at virtually all price points with multiple offers. That means that you can look, and you can look. You can take as much time as you want to in the looking process. But be prepared when you find that house that you want. You need to execute immediately. You need to be represented by an agent who understands how you get through a multiple offer process and how they can position you best to be able to get into contract where there are other buyers competing against you. If you're a seller, you need to recognize that while there's upward pricing pressure, and there's a lack of inventory, that there are still these appraisal problems that are happening in the market. And so you've got to be a bit constrained in how you're pricing your properties for sale. You need an agent who can really help you figure out how to set your house exactly right, get you a buyer, and get you through the appraisal process, least amount of pain and least amount of problem as possible, because there are ways to help get through the appraisal process. There are ways that agents can help set up a home that it's going to be more likely to appraise for contract rather than less likely. So if you're buying a home, you're selling a home, if you've got economic dislocation that's causing you to worry about whether or not you're going to be able to stay in your home, give us a call at the Chong Miller Group. I'd be happy to sit down and talk with you. We'd be very happy to figure out how to represent you and your interest in in the entire process. You might be looking to get into a place with a bigger yard. You might be looking to get into a place with an extra room to set up as an office in your home. You might be looking to downsize or eliminate your mortgage. Or frankly, you might even be looking just to refinance or to engage in some home improvements that you think could add functionality and value to you, as well as maybe increase the value of your home. Give us a call. We'll be happy to talk with you about these things. We are experts in the marketplace, and we understand what all of the different points are for leverage that you have. We understand all of the different ways that you can modify your living situation, changing your existing home, modifying your existing home, changing the loan that you're in, or changing the type of property that you live in. So I look forward to talking with you. Please give us a call, send us an email, as you see here on the bottom of the screen. If you're watching this on YouTube, please subscribe, hit the like button, click the notification bell so that you know when these videos come out, and we'll look forward to talking with you soon. Thank you.